Good evening. Can you hear me? Say yes or no in the chat box so that I will start the class. Can you hear me? Say yes or no. I will start my class accordingly. Okay, can you hear me? I'm repeating this again and again just to start the class. Can you see this video where the asset accounting is there? So can you say something at least? I can hear that. Yes, sir, visible. Okay. So we will start with the asset accounting. Assets are of two types, that is current assets and what do you call it? Non-current assets. Current assets are those assets which are held for something which you call it the operating cycle, or the 12 months, whichever is less. And non-current assets are those which are held for operating cycle or 12 months, whichever is less. So non-current assets are assets which are held for more than 12 months, and current assets are which are less than 12 months. Okay, so we read through this asset accounting and try to do the questions. Understand the term assets, understand the type of asset, accounting for assets. Asset accounting, we understand, is a process of accounting for acquisition, use, and disposal of assets over their entire life. So, asset accounting is to account for the assets, charge the depreciation over the assets till the asset is in the books, you maintain the asset, and at the last, the asset is disposed of and the accounting entry is passed. It aims at the recording and reporting of financial information related to a business financial statement. So whatever is a company, or it is a proprietorship, or it is a partnership, so the asset accounting is a must. The balance sheet reports all assets of a business. Accountant must properly report this information because assets represent a portion of total wealth or economic improvements made by the business. So you see, the financial barometer or the financial thermometer of a business is the study of assets. If the assets are growing, assets are increasing, that means the business is growing, that means the business is on the growth path. On the other hand, if the assets are diminishing, day by day they are reducing their balances, that means the business is not on growing path, the business is entitled to close down. Okay, the accounting equation is asset is equal to liabilities plus owner's equity. Okay, asset represents the right to own anything which you have. For example, you have the trade receivables. There it is the right to own the money which you owe from the customer. Okay. The second asset is inventory. Inventory is what you have for the inventory purposes. You are holding the inventory, work in progress or finished goods or raw material that you are holding for the finished goods or the processing. You are holding the third type of asset is the fixed asset. It is a PPND, that is plant, property, and equipment. You are holding that asset which is held for more than 12 months. Okay. The balance sheet assets are grouped under the two heads, fixed assets and current assets. Fixed asset is no longer used in the India's balance sheet. You will find the word as non-current assets. Non-current assets and current assets. So fixed asset is no longer used. You will find the word as if non-current. So you will find the two words non-current assets, fixed is no longer used, instead non-current used, and second current assets. Current assets that are forming the part of circulating capital. You see, or also called as the working capital. The current assets are the part of working capital. They are replaced frequently. Replaced frequently, matlab, uh, for example, you have the raw material that is converted into the finished goods, that is converted into the trade receivables, that is converted into the cash. So from inventory to finished goods to trade receivables to cash is the conversion of the working capital. Okay, you convert it to cash during the course of trading. The most common current assets are stocks, account receivables, and cash. Uh, these assets are cash and other assets expected to be converted into cash or consumed either in a year or in the operating year, whichever is less. So, in the current assets, the definition is that current assets are those assets where the operating cycle or the 12 months, whichever is less. So you will find that in the definition of current assets. Without distributing normal operations of a business, following other major assets considered as current asset. Any questions if you have? Screen not visible. Sharing is paused. Is it visible now? Is it visible? Screen visible or not visible? Visible. Okay. So following are the types of current assets. Number one is cash and cash equivalents. There, cash is mentioned separately that this is the cash, and cash equivalents are deposits or any other form which are for less than 3 months. Something which you have kept as a deposit which is less than in the bank for 30 days, or sorry, for 3 months, it will be taken as cash equivalents. Cash and cash equivalent are the most liquid asset, which includes currency note, bank deposit, bank deposit, which are of period less than 3 months. Okay, negotiable instruments, etc. Cash or bank balance denote the same thing. In the books, cash will mean cash and bank will mean bank balances. Short-term investment include securities bought and held for sale in the near future to generate income on short term. So what is considered as short term? Anything which is for less than 3 months. Okay. Account receivables are the non-collectible balances of debtors which are not due at the time of closing of the books and shown outstanding in the books of accounts. So, for example, there is 50,000 rupees that is a sum due from accounts receivable from Ram account, 70,000 from Sham account, a 1 lakh from Mohan account. Those are the account receivable balances. Okay. Fourth is inventory. Inventory is a major part of current assets because uh, current assets have inventory. Inventory is a major part. Raw material, work in progress, and finished goods inventory. The inventory value is reported in the balance sheet date, is usually on the historical cost or fair market value, whichever is less, as per the AS2. Inventory के लिए one thing is very common that in the balance sheet, inventory is reported at cost or market value, whichever is less. Okay, that is must for all the balance sheets. This is known as lower of cost or market rule. Prepaid expenses are the expenses paid in cash, recorded as assets before they are used or consumed. Are you clear? What are the current assets? In the PP&E, the plant, property, and equipment, also called as fixed assets, are the assets of a business intended for continuing use. You will use for more than a year. That is why they are called as PP&E. For continuing use rather than a short-term temporary asset. So the intention of the business is to use the asset for more than a year. Fixed asset must be classified in a company's balance sheet as tangible, intangible, or investments. Fixed assets are classified into two parts: tangible, what you can see, what you can feel, and intangible, what you cannot see, what you cannot feel. Intangible are the best example of intangible is softwares. You can't see where is a software, but that is a big value. Patents, goodwill, trademarks. So those are the intangible assets. IPR, those are the intangible assets. Such as the tangible are such as land and building, plant and machinery, furniture and fixture, furniture and fittings, motor vehicles, and IT equipment. Examples of intangibles include goodwill, patents, and trademarks. So types are current and non-current or PP&E. These are fixed asset. They are in two parts. What you call is a tangible and what is intangible. Intangible can be patents, copyrights, franchisees, goodwill, trademarks, know-how, computer software. So those are the intangibles. And tangibles are building, plant and machinery, office equipment, vehicles, furniture and fixtures, and computer equipment. Okay. The types of assets are current and non-current. Any questions anybody has? Any question, anybody? So current asset accounting, we will be able to understand the features of current asset accounting and understand the accounting of current asset. So features of current asset. Current asset are, it is rightly observed that current asset have a short lifespan, that is a life of less than a year. These type of assets are engaged in the current operation of a business and normally used for short term, that is 1 year, operations of the firm during one accounting period within 12 months. So current assets are those which are used in company's operating period, that is the 12 months. The two important characteristics of such assets are short lifespan, and second, swift transformation into other forms of assets. Okay. Other than cash, every asset will be converted into cash. Cash balances may be held for a week or two. Account receivable may have a lifespan of 30 days, 60 days, and inventories may be held for 30 to 100 days. Okay. Current assets are the first term reported on the balance sheet under asset accounting. So asset accounting will have non-current and current. Current is a second asset, but it is shown in the balance sheet, the first asset. So these terms items include cash and cash equivalents, inventory, account receivable, and short-term marketable securities. Current assets are cash and other assets that will be converted to cash used up during a relatively short period of time, usually a year. So current assets have all those items which are converted into cash within a period of 1 year. Okay. Current assets are normally listed in the order of liquidity. That is how really they can be converted to cash. Any questions? Meaning current asset accounting value these items or current at current market value, since the information is readily available and these items can be quickly bought or sold in the current market. Current assets may also be represent the items used by a company to generate sales for normal business operation, because it has inventories and account receivable. Inventory are used to generate sales, so sales can also happen from it. Current assets consist of cash and other assets such as debtor inventories, which are expected to be converted into cash to be used in the operations of the enterprise within 1 year. Okay. Any question? You know the accounting of cash. So There is a real account, the cash is a real account on which the rule will be applicable. Current assets debit, what comes in, credit was gold out. This is a real asset and this will be rule. Okay. This is the most liquid of all assets because it is always in liquid form. If a company has a large pile of cash, then it has a nice safe cushion for hard time. The cash amount on the balance sheet is the amount of cash owed by the entity on the balance sheet date. Okay. Cash management is necessary to ensure that at any point of time, a company has neither too little or too much cash in hand. But the company has to do a cash management to ensure they don't have less of cash, neither they have more of cash, because excess of cash keeping can result in loss of money, loss of interest, or less of cash will help in your meeting your non-meeting of expenses, non-meeting of your liability. Okay, so you should have the adequate cash. It is important that a company does not maintain cash on hand and on deposit in checking accounts beyond a minimum amount that is necessary to support the ongoing operation, since cash is essentially a non-bearing interest. To help manage its cash, a company should reconcile its bank statement, including preparing a reconciliation report and making adjustment if there are any discrepancies between the company's records and bank records. The company has to reconcile cash. Whatever are these discrepancies have to be noted down and have to be sorted out. Cash and bank balances is shown in the asset side of the balance sheet under current assets. Sorry, under current assets heading. At the time of closing of books of account, there should be a letter of confirmation required on the bank letterhead for the bank's balance shown in the balance sheet. So at the time of preparation of balance sheet, company must get the balance confirmation certificate signed off by the bank manager. Okay, that this is the balance as per the bank statement. Also, the letter of confirmation from the management company is required for cash balance shown in the balance sheet of the company at the end of accounting period. It is a requirement as per CARO guidelines. Okay, CARO is Companies Audit Report Order. CARO, Companies Audit Report Order. Any question? Second amount on the current asset is AR. First is cash and bank balance. Second is the AR. AR is the amount receivable from the customer. When goods and services are sold under an agreement, the agreement is a must. Whatever you are selling under an agreement, but the other party is not paying as per the agreement. So you have legal right to challenge him, sue him, and file a suit for recovery, permitting the customer to pay for them at a later date. So if you are allowed a credit of 30 days, so he is enjoying the credit of 30 days of 45 days. That is mentioned in the letter of credit, or that is mentioned in the letter of contract. Okay. The amount which is due from the customer is recorded as account receivable. So that is a account receivable. Receivable are the assets account representing the account owed to the firm as a result of credit sale of goods and services in the ordinary course of business. The value of these claims is credited on the asset side of the balance sheet under title such as account receivable or trade receivable or customer receivable. The term can be defined as debt owed to the firm by customer arising from sale of goods or services in the ordinary course of business. According to Robert and Anthony, account receivables are the amounts which are outstanding to the business enterprise, usually by its customer. Sometimes it is broken down into trade account receivable and non-trade account receivable. The former refers to the amount owed by customer and later refers to the amount owed by employees and others. So account receivable is amount which the customer owes, and non-trade account receivable is which the employees and others owes. Okay. Any question? Generally, when a concern does not receive cash payment in respect of ordinary sale of its products or services immediately in order to allow them a reasonable period of time to pay for the goods they have received, the firm is said to have granted a trade credit. Suppose you are the management of a company. Suppose you have billed to a customer. Suppose the customer is not ready to pay. Customer does not have money. You allow him 40 days credit. Okay, that is called as trade credit. Thus, rise to certain receivables or book debts expected to be collected by the firm in the near future. You allow him 30 days credit or 40 days credit. So, till the time that balance is there in trade receivables, once it is collected, it will come in cash. In other words, sale of goods on credit converts finished goods or selling firm into a receivable or book debt. On their maturity, these receivables are realized and cash is generated. So from inventory to finished goods, from finished goods to trade receivables, from trade receivables to cash. Okay, would be the average daily credit sales into the average collection period. Okay, account receivables are reported on the balance sheet at their net realizable value. Whatever is realizable, that is what is reported. This amount is the amount of cash expected to be collected from the account receivable. Usually the balance shown in the debtors ledger are supported by sales document. When sales are made on account, a very high probability exists that some account receivables will not be collected. The amount of receivable not expected to be collected is recorded and reported in the account allowance for bad debt. which is a contra asset account, the balance. There is a asset account that is trade receivable, and contra asset is allowances for bad debt. Like fixed asset ka asset account, and there is depreciation, that is contra asset. What is contra? Which is opposing the account. Contra asset. Depreciation is a contra asset account. Bad debt is a contra asset account. Okay. Any questions if you have? Okay, credit sales may you have to maintain the receivables, that is retaining the present customers, that is must, attracting potential customers, which you will give the additional discount, quick distribution of goods, you will give by additional discount, and potentially to face the competition, you'll give the extra credit. So these are the reasons for you to give the extra credit. उससे expansion of sale होगा, more liquidity into the business, और third आएगा higher level profit. There is a fifth which tactics which is used by a business, which is allowing the bills of exchange to the buyer to use the facility of getting on credit. So 5 schemes are used to attract the customer, to potentially attract the competition. पहले था first is your cash and bank balances, second is account receivable, third is what you call it as an inventory. Inventory are of three types. First is raw material, second is work in progress, and third is finished good. Okay. Inventory are a major part of current assets. It includes raw material, first part, work in progress, second part, and finished goods. And fourth part is stores and spares. Those are the items which are kept as stores and spares. Ideally, the organization, the inventory management is for 30 to 100 days. Okay. Depending upon the requirement, inventory are those items which are required to make production smoothly, and it can be converted in cash by the sale of finished goods. So those will be converted into finished goods, and I have to sell it to the finished goods. The finished goods will be converted into account receivable, and there will be cash. Okay. For the smooth functioning of an organization, inventory management is important. With the proper inventory management, an organization can earn more profits than its competitors. Excess inventory may cause serious loss to the company. So, in an organization, inventory level will be observed by expert group of people. When an item is purchased, it is shown on the asset side of the balance sheet under current assets heading under the inventory. When an item of inventory is sold, its cost is transferred from the inventory asset account to a balance sheet account to the cost of goods sold account and income statement account. So balance sheet से प्रॉफिट एंड लॉस में आ जाती है ये इन्वेंट्री. Operating cycle of inventory is inflow of cash paid by customer pay for their purchases, stock ordered from supplier, production turns stock into finished goods, stock held until customer orders the product sold to customer, and customer pay cash. So this cycle continues forever. Accounting entries are there. You can note the entries. At the time of purchase of inventory items, raw material inventory to party account, debit and credit. At the time of issue of material to shop floor, work in progress, raw material inventory debit to raw material inventory. At the time of conversion of work in progress to finished goods inventory to work in progress inventory. At the time of sale of finished goods inventory, party debit to sales. At the time of booking material completion against sale, material consumed to finished good. So is the point clear to all? Inventory का? Or are there any question? So for previous questions, at the end of the class, I'll be doing some questions. I don't have that experience that I will be sharing the past year questions, but these are some samples which will be made by me, and you will be attempting those questions. So there is no way by which you can show, I can show you the last year question. No, there is no link for that. Nothing will be there. Nothing will be there. You will not find, but questions are from the book. So we'll find the questions from the book. 90% of the questions are from the book. So this book is a must. You have to repeat this book 2 or 3 times. I repeat that you study this book 2 or 3 times, you will be able to pass. Generally, the pass percentage is quite 50% is the pass percentage. So most of the students, 80% or 90% of the students pass. That is my experience. I have been training CAT students for past 20 years, and very few the ratio will be 1% or 2%. Other than that, most of the people will pass. They come in from the exam and they say paper was easy. So prepaid expenses are the expenses which you pay in advance. Suppose you have paid 3 year K expenses as prepaid. So in the first year, the prepaid expenses will be reduced and they will book the expenses. In the second year, the prepaid expenses will be reduced, and third year the prepaid expenses will be zero. So for 3 years, the company balance sheet will show the prepaid. Okay. A prepaid expense is an asset awaiting the assignment to expenses. Some expenditure made during one period are not properly recognizable as expenses until subsequent period. Prepaid expenses result from the application of accrual. So because of accrual accounting, prepaid expenses will come. Prepaid expenses are accounted for in the asset side of the balance sheet. Those are appearing on the asset side. Prepaid expenses are the expenses which are not linked to the accounting period in which it is accounted in the books. So these expenses are not charged in the profit and loss account. It is shown in the asset side of the balance sheet as prepaid expenses. For instance, if a company has paid insurance expenses of 12,000 for the period 1 January to 31st December. So uh, 3 months are current, but 9 months are prepaid. The period of accounting is from 1st April to 31st March. In that case, prepaid will be 9 months, which is 9,000, which is paid in advance and is shown on the asset side of the balance sheet. Rupees 3,000 pertain to current one and will be taken to the P&L. And 9,000 will be shown as prepaid expenses of the balance sheet. The following entries will be passed. Insurance expense is 3,000. Prepaid expense is 9,000 to bank cash 12,000. In the following year, the following entry will pass. Insurance debit 9,000 to prepaid expenses credit 9,000. So is this clear? Okay, I will give you my WhatsApp number. My WhatsApp number is 98188296. 677. That is my WhatsApp number. Okay, friends, bye for now. Thank you.